Hello traders and welcome to another video review. Today is Wednesday, February 22nd, 2023. Let's find out what is going on the Forex calendar today. For Wednesday we got plenty of the very important data released. Some of them was released already, like Reserve Bank of New Zealand interest rate decision, statement and press conference. The Reserve Bank of New Zealand hiked the interest rate from 4.25% to 4.75% as expected. So no surprise here. Nevertheless, we still will take a look at the New Zealand dollar later on. What else do we have today? During the London session, we got German Ifo Business Climate Index and the other Ifo sub-indices scheduled for release at 10 o'clock. The market participants expect a hike from 90.2 points to 91.4, so the improvement in Business Climate Index is expected in Germany. Reserve Bank of New Zealand press conference is scheduled for release at 3 p.m. and then of course today is the day when the FOMC meeting minutes are released, and of course this is the same hour as every day, every month, and this is 8 o'clock p.m. So plenty of the interesting data to comment on today. Let's do the analysis of the New Zealand dollar first. The New Zealand dollar is penetrating the lower levels of the range. As you can see, the decision of the Reserve Bank of the New Zealand didn't actually make any big moves on the New Zealand dollar. We test the level of 6,188 pips. This is the low from the beginning of the January 2023. We tested it in the middle of the February last week exactly as well, and then we went again lower to test it. Nevertheless, there is no breakout here yet. Momentum is still negative, momentum is still weak, so any bounces should be considered as a corrective in nature. If we apply to our chart let's say that kind of trend line, there you go. This trend line is telling us that the location, this trend line is telling us that the market is still under the bearish control, because we are below the trend line, below the key technical there used to be resistance, so there's another resistance, 6,410 pips, below 150 periods moving average. We have the cross of this moving averages, so it looks like this movement to the downside is being continued, right? We got wave A, we got wave B, we got wave C done to the downside, so now it's time for maybe some kind of a small improvement in the rate of the New Zealand dollar. Maybe we will get towards the local technical, let's say, resistance located at a level of 6,257. Maybe, just maybe, we will test that level. In case of a further let's say rally, we got the technical resistance located just above it, which is around the 6,260 and 69. So technical resistance is blocking the bulls basically in order to follow higher, to move higher and follow the next targets. So right now it doesn't actually looks very bullish on the 4-hour chart of the New Zealand dollar. More downside is expected after a short period of the consolidation and maybe some kind of bounce to the upside above 6,267. However, it's highly unlikely. So that's the New Zealand dollar. We got data from the let's say Germany scheduled later. So let's take a look at the euro to the Japanese yen. What do we have on the 4-hour chart? Euro to the Japanese yen here is, as you can see, very interesting. We got series of the engulfing patterns and we got this pin bar here. made just like 12 16 hours ago. So right now what do we want to see is a confirmation of this candle. So let me just zoom in even more. Let me just attach my line, zoom in even more for you guys to see what I have in mind. So if this is a valid, let's say, pin bar here, we want to see a movement to the downside, a confirmation movement to the downside. We can, for example, place our trend line here and wait for a breakout to the downside. That would be first indication that this bearish setup is being played out by the market participants. The target in that situation would be somewhere around the level of 142.36. That's the technical support, and then eventually, in case of the extension, we can even hit 141.46 as well. The momentum is still positive. The momentum is still quite strong, 58 points. Nevertheless, it looks like it's moving lower and lower. So breakout below this short-term trend line might trigger the move towards the level of 50, which is the neutral level, and that will be somewhere below below the trend line and between 50 and 100 periods moving average, somewhere around this technical support 142.36. So please keep an eye on the euro to the Japanese yen. It looks kind of bearish because there is no momentum to the upside, and the recent level of 144 had been rejected, and it's very easy to see that the bears are defending this zone. So we should expect some kind of a movement to the downside soon on the euro to the Japanese yen. Let's take a look at the SP500 index. What is going on here? Very interesting situation. We have a rejection of the level of 4,195 points. We got this technical resistance here, and then of course a failed attempt to break out here. The level of 4,176 was tested twice, nothing happened, and as you can see, we have a tweezer top movement to the downside, gap down. We broke below 100 periods moving average. We are already below 50 periods moving average. So right now we are trending strongly to the downside and testing the level of 3,993. And if you break below this level, the next target is located around 3,947 and even 3,000. This is important technical support, so let's make it here. There you go, big line here, 3,884. The momentum is negative, is weak, and hit the extremely oversold market conditions on the 4-hour chart. So maybe we should expect some sort of the bounce here, okay, in order to get the market from the extremely oversold conditions. But this strong movement to the downside and inability of bulls to break towards the 4,200 and higher makes me a little bit more confident about the situation where the movement to the downside is much more possible than the movement to the upside in the short term, of course. And last but not least, as usual, let's take a look at the cryptocurrencies. This time we are going to take a look at the Bitcoin. What is Bitcoin doing? Well, it doesn't do much. There is a clear inability of a Bitcoin to break above the 25,000 level for good. Recent high 25,227, tested here and then rejected. Almost all of these candles are red, which means bears have temporary control over the market. We hit the technical support 23,868. This is the support for the from the range support. One more support is of course a little bit lower, located here, 23,347, and as you can see, momentum is negative, 42 points only. So there is a clear problem for bulls to move higher. Every time they go just above 25,000, they are being strongly rejected. So this is a very, very important target for bulls and bears, and if it's violated and the new local high is made, for example, around 26,000 or higher, then of course this up move might be continued, and the situation of the Bitcoin will be kind of a different, because any movement above 25,500 will be considered as a new swing high, which means it breaks this sequence of the lower highs and lower lows, which means that the lower time frame trends are now pointing to the upside, so they are uptrends, okay? Which is why this zone here is being so aggressively, let's say, defended by bears, because they know that once it's broken, they are defeated at these levels, and more bulls can join this rally to the upside. So please keep an eye on this technical resistance level, the recent swing high, and of course the range between these two lines here. Any violation to the upside is bullish. Any violation to the downside might extend the correction towards 23,330, where the 100 periods moving average is located. So that's my outlook for the markets for today. Thank you very much for listening to it, and I hope I see you guys tomorrow. Take care and bye bye.